All right, good evening, folks. Welcome to Catch the Wave, 10 Steps to Nailing the Next Big Crypto Trend. Before we get into anything tonight, I'm not going to be recommending anything today. Please trade only with risk capital that you can afford to lose. Treat this like a business. Seek an edge before you invest, or you'll trade along with the rest of the investing herd and lose money. Don't want to see you do that. Let's do everything we can to not do that, okay? So a special welcome out there to our premium members tonight. My goal is to share some guidance on how to get on board with the next major crypto trend. And tonight I will reveal 10 steps to follow that will simplify your approach and give you repeatable results. Welcome aboard, everybody. I've got about 45 minutes of material for you, and then I'll answer your questions. We'll wrap up about the top of the hour here. So please do me a favor, hold your questions until the Q&A period. I've had to learn this through a lot of experience. I love to help people. I love to answer questions. And when I stop in the middle of the presentation to do so, it makes everybody angry. That was not asking the question. So I don't want to do that. So let's wait until the end of the presentation, until the Q&A period, and I'd be happy to help you. Now, again, I can't really comment on your portfolio. A lot of times I find that people strangely decide that this is the perfect time to seek portfolio advice. Like, what should I do? Okay, during a webinar is the perfect time to do that. So today's topic is about trend trading. There's no one way to do this for everyone. However, the basics always apply. Right, so I don't want to get into religious wars. If you've got a particular way of doing this, it may be different from mine. Not saying yours is right or wrong or anything like that. Whatever works for you is what works for you. I'm going to show you what I do tonight. Who is this guy? Who's talking on the other end of the microphone? My name is Doc. I'm a husband, father of 3, a student pilot when I can, former product manager, engineer. I'm one of those guys that quit my job. What are you, nuts? You quit a job to trade from home? Are you crazy? Well, it might have been a little bit aggressive at the time, but it's been worth it. So I teach people options, futures, technical analysis, cryptocurrencies, and neurolinguistic programming. I've been doing this since 2005, kind of at gunpoint. People started showing up at my front door, and I had no way to turn them away. So, all right, I'll teach you what I know. So I like to do things a little bit differently. Those of you that know me, I like to put things in a way that maybe it relates to you, resonates with you. Kind of try to shortcut things, relate it to something that you already know. And to this end, I wrote the book, Hacking the Holy Grail, which is available on Amazon. This is what it looks like. If you have not read the book yet, you can probably get it used, or you can go out there on Amazon and get your own copy. It's also available on Kindle. So tonight, we're trying to solve a problem, right? This is why we get together, because we have a problem and we want to solve it. So how do we get on and stay on a major trend? Of course, there's some great examples of major trends lately, aren't there? So if we look at this one, this is our favorite BTC, Bitcoin. So looking in the rearview mirror, this is what we typically do, right? We say, oh, well, I would have got in right there, and I would have sold out right there. It's really easy to do, and that's the Monday morning quarterbacking that a lot of us do. But it's not that simple, is it? It's really not. You try to do it in real time, and all of a sudden the hard right edge rears up and bites you, and it's a little bit different in real time. That hard right edge is very, very different in person. So without question, riding a big trend is by far the most potentially profitable strategy. By far, it is. Now, we can do other things, like we can look to scalp. So we can scalp trade, we can do that through a number of different platforms. And by the way, that's going to get better and better and better as we get into 2019. Definitely. A lot of new platforms coming online for that. We can swing trade as well too, right? So swing trading is great as long as you've got something to swing. Or we can do the old standby hodl. How's that working out for you? So there's a lot of different ways that we could, I could probably fill this page up with different ways to trade, regardless of what we're trading, right? There's a lot of different ways, but quite honestly, over time, nothing has been proven to be quite as efficient and profitable as getting your hooks into one of these big whale trends and holding on for dear life until it's done. So that's kind of the point of tonight's presentation. The strategy itself is rather elementary. There's no rocket surgery going on here. In fact, most new investors are surprised how simple this strategy is. It's very elementary, very crude in some ways. Okay. So ask an old pro when to enter a trend trade position, and they will say, kind of flippantly usually, well, when a new trend has begun, I will get on board. I'm like, wait a minute. And that's the real answer. When a new trend has begun is when they get on board. So don't confuse this with a standard crypto commandment of hodl, right? So we hear this everywhere. Hodl, dude, man, just hodl. That's all you got to do. Well, what I want to challenge you tonight is to find your favorite hodler and ask them what their strategy rules are. All right, so Mr. Hodler, when do you actually exit the trade? Well, they don't know, and they can't give you an answer for that. They don't know. I suppose the answer is when it feels good, and we all know how that works. A trend trader seeks to find the meat of a move. Now, what's the meat of the move? Well, just the general, if you grab a a bone or something like that, grab the meat off of there, right? This is what we're doing. So we're not going to get into the very bottom. We are not going to sell out at the very top. That's fantasy land. It's just not going to happen. It's too tough to get in at the bottom, the very, very bottom. And we all know what the top is like. Top is very, very volatile. Very, very difficult. So we're happy just trading the meat of the move. So most investors that were indoctrinated, and that's probably the right word there, is indoctrinated. You must hodl. Thou shalt hodl if you're going to trade crypto, right? You just get bombarded by this. And so everybody just sort of says, well, everybody else says hodl, so I suppose that's what I have to do here. Well, a lot of people that came, that drank that Kool-Aid in 2017, they came to me in 2018 as their position was down 50%, 60%, 70%, whatever. And they said, well, this is painful. How should I have done this? How should I have traded this to be able to preserve profits? So I was originally a hodler. I was in this to buy and hold forever, for life, and all of a sudden I'm down, like 80%, and I could have made an outstanding profit on here, and I blew it. So what should my exit have been? So I'm getting a lot of questions from converted hodlers these days. So that's trend trading. Trend trading is hodl with structure. So this is kind of what a lot of you are looking for. You just didn't know it by this name. So as I explain trend trading, I think you'll be surprised at how simple this is. It's really not that hard. It's not easy, but it's really not that complex and difficult. And you'll be even more surprised to hear that this is how professional fund managers trade. This is how they do it. Most professionals have very crude systems. You'd be surprised. But it's taken them years and years and years to get a simple system. Isn't it odd how it works that way? Most newer investors have much more going on their chart than they need. But there's a reason why retail traders don't do it, which I'll discuss in a minute. There's always a complication, isn't there? So let's get started with the 10 steps to nailing the next trend in crypto. This is what you're here for tonight. Step 1, understanding the challenge and preparing yourself. Isn't that odd that I start out with talking about you? No, it's not. So there's a reason why professionals tend to favor this strategy and retail tends to avoid it. This is one of the simplest possible strategies. I've already said that probably about 4 times by now. Yet it wears down the retail trader. It grinds them to a pulp. Why is that? Why is this so difficult for a retail trader? Well, quite honestly, retail traders need wins and affirmation. Good job. Good job. Great trade. Nice job. Okay, well, I guess I'll stick around for a little while. This is what I see retail traders do. They go out, they get excited by some kind of a program, they buy it, or they buy the book, or they do whatever they have to do to invest themselves into it. They take maybe 1, maybe 2 trades, maybe at the outset 3 trades. And if these are not successful, 3 strikes and you're out. You go thundering over to this strategy over there, which you see up for sale, or the new book that just came out. And guess what? You're going to give it 1, 2, 3 strikes, and you're out of there. This one doesn't work either. Let's go over to this one. All right, 1, 2, 3 strikes, you're out. Let's go over to this one. 1, 2, 3 strikes, you're out. Does this sound familiar? This is what we all do. We just run around from strategy to strategy to strategy. Why? Because you're not winning the trades. If you don't get immediate affirmation, immediate positive feedback on your strategy that, hey, good job, you're doing a good job, you're terrified. You're terrified of losing money. Look, I understand that. I understand it. Nobody likes to lose money. But what you end up doing is instead of mastering a trade, you become a jack of all trades and a master of none. So this is what retail traders need. They need wins. They need affirmation. Otherwise, they're going to bolt. They're going to look for something else that provides that holy grail effect, a trading strategy that never loses and never risks any capital. That's what we want. Doesn't exist. So it might take several entries. Let's get back to trend trading here. Trend trading, you don't know what's on the right side of the chart. You don't know what's out there. You can't see this. You can't see this rally coming. Everybody wants to know what's going to happen tomorrow, next week, next month. Hey, when is Bitcoin going to turn around? When is this going to bottom out? Everybody wants to know. And something I've been saying lately is the more that you want somebody else to tell you what's going to happen, the further you are from profitability. That's the truth. So what you have to do is you have to attack something based on a rule set. Hey, if this happens, if we start printing new highs, then I'm going to take the entry. Whoop, that didn't work out. Whoop, this didn't work out. This didn't work out. Well, let me try one more time. Oh, yeah, there we go. So it may take several entries before you latch onto the real trend. So what I found is that most retail traders give up right before it takes off. Let's go back to this one. What if you were to give up right there? Well, 3 strikes and I'm out. This is terrible. This is the worst strategy I've ever traded in my life. I quit. I'm going to go off and look for something else. And then boom, if you just stuck in there one more time, all of a sudden you're up big time. And you wonder how people do it. Because you think that you're being conservative. You think that you're being wise by quitting and moving on to something else, but it actually doesn't work like that. I get it. I understand why it happens. It's the dinosaur brain that's inside of all of us that's trying to protect you. Unfortunately, it's protecting you from profits too. So retail investors give up right before something is successful. We do it all the time. Okay, somebody is saying that the volume is gone. Hopefully we're talking about the volume of the webinar and not of the crypto market. If anybody else has a problem with volume, well, you're not going to hear me, so. But if you guys are hearing me, let me know. Just go ahead and type in there and make sure that there's no problems here. Okay, so we're good. We're good. All right, thank you guys. So you must have a defined strategy, stick to it and play the long game. Keep the prize in sight. You got to hang in there. You got to have a little bit of faith. So that is the challenge. That's step one, is the challenge that we have. Step two, get your head out of the financial media. If you spend any time around me, I will go on and on and on about this, because this is one of the worst things that we can do to ourselves. Looking to the media to tell you what is going to happen next is guaranteed to give you a bias. Remember, guys, what is their job? What is the financial media's job? It is not to inform you. It is to sell ad space. Their job is to sell ad space, is to get clicks. So what they're going to do is they're going to write articles which will get more viewership, readership, whatever. More views, more reads, more clicks. And if it happens to be because the market's going down, well, they're going to inflame that. Hey, everybody's excited, everybody. And in fact, the ratings go up on the financial news channels when markets go down, because all of a sudden people want certainty. They want to read or view something that tells them what's going on. And so they're just going to give them what they're looking for, which is more negative news, because it increases the viewership. Understand the game that's going on here, because what's happening is all of a sudden it's feeding into your mind and saying, oh, it's going down, it's going down, it's going down. It's going to give you a bias. You're not going to be able to see what's right in front of you. It's going to put the wrong lens in front of your eyes. You will not be able to see what's actually happening in price. This happens through the subconscious mind, the reticular activating system, and your belief system. You will see what you think you're supposed to see, and not what's actually out there. Have you ever seen two people get in an auto accident and they can't even agree on what happened? That's why. So it automatically makes you part of the investing herd. Oh, that's the worst thing in the world. All of a sudden you think you're doing the right thing because everybody else is saying the right thing. How many of you are going out to Twitter or Reddit and looking for advice on what to do? Stop it. Markets are irrational, and they will move in a way as to cause the maximum confusion and loss amongst the herd. Stop being part of the herd. So Galen's telling me, let's cut to the chase. How can you help us? I'm giving you that right now. I'm trying to help you guys right now. So if you want to ensure that you miss the next trend, Galen, keep watching or reading the financial news or look to others' opinion, and you will be part of that herd. In fact, they'll be trading against you. So if you want to grab the next trend, stick to the price only. Stick to the charts. Keep your head out of the financial news. This will be difficult because you're used to this. You're trained to do this. The first thing that something happens, we go right to the news. You've got to break the cycle. Step 3, build a plan and start small. You might think that you can trade from your hip and grab the next trend when it shows. Impulsive trading is almost certain to trade with the herd and create poor entries. That's impulsive trading. So build a full business or trading plan using the metrics described here and work it. Commit to it. It should only take you a few minutes a week. Treat this like a business and it will pay you like a business. Treat this like a hobby and it'll cost you like a hobby. Running this strategy with a plan sends a very important message to your subconscious brain that this is not a risky venture. Guys, this may be the most important thing. I know you guys are out there going, drumming your fingers like, when are you going to get to the good stuff? I'm telling you guys, this is the good stuff. This is the difference between a professional and an amateur. If you find yourself wondering what I'm talking about or disagreeing with what I'm talking about, you've got some work to do. Investors without a plan will shy away from the difficult entries because they differ from the herd mentality that they've adopted. Now we get into the nuts and bolts of things. So Heinz is going to be happy now. Let's determine your entry method. So for over 100 years, professionals who are managing big numbers are not hodling nor buying the dip, believe it or not. You've learned about that through Twitter or through Facebook or through whatever social media program that you follow. Oh, you got to hodl, you got to buy the dip. Why? What's the structure behind that? The traders with the best performance are buying assets that are going higher in price. It's counterintuitive based on what you've been fed for years. Everybody says buy the dip. Why not just try buying something that's going higher in price? If it's going higher in price, it's being accumulated for a reason. Why not get into the trend that's working? So buy the dip can work well in primary bull markets. So what I'm talking about here is people get used to in bull markets, if you have a primary trend that's going higher like this, buy the dip does work because the overall trend is still going higher. Buy the dip. Buy the dip. Okay. But if we're in a primary bear market, buying the dip means that you're a loser averaging down. That is not how professionals manage a trade. Losers average down. Think about that for a second. So here's some potential entry strategies. Believe it or not, and I was a little surprised when I read this too, but until I did some research, but buying the all-time highs, this actually goes back 100 years. For those of you that don't know who Jesse Livermore is, do a little bit of research, do a little bit of reading, understand who Jesse Livermore is, and you'll learn a lot. Buy the all-time highs. Right now is probably not a good time for us to be looking to buy the all-time highs. We may be waiting several months before that comes along. So what we can also do is buy a 20-day breakout or a 55-day breakout or an 89-day breakout. Now, which one should you use? I'll get to this in a little bit. Basically, it comes down to which one that you resonate with. So all of these are price-based strategies that give you a non-delayed entry. Price action is non-delayed. There's no latency there. If there's a breakout, that's a breakout. It's happening right now. You enter. There are other indicator-based strategies available, but give delayed entries. So I've looked at several of them. A lot of them are like moving average ribbons or guppy strategies. All of these are going to be, they're pretty, they look cool, but they're going to be delayed versus a price-based breakout. Here's an example of what a price-based breakout looks like. So we can use an envelope like this to show us what, like in this case, what a 20-day high looks like. These are all 20-day highs. The longer the breakout length, the more edge you give up. All right, so if you have a delayed entry, if you're going to wait for an 89-day high, that may be a long time to wait, but the fewer false signals that you'll see. Conversely, the smaller one, you're perhaps going to have more edge on the actual breakout, but you're going to have more false signals. Okay, the longer the breakout, the more edge, right? So we get to step 5. Set your stop. Set your stop. I utilize rule number 1 of risk management. Rule number 1 of risk management, which is amazing to me that nobody does this, But you've got to identify your stop before you enter the trade. We don't do it that way. We enter the position, and then when it starts going south, we scramble, right? So I also ensure that I cannot lose more than 2% of my capital or less on any trade entry. This is what I call rule number 2, or the golden rule of risk management. These can be set through either active stops executed through my broker or through position sizing. Okay? Very simple, very quick. Now we get to step 6. We're flying through these. Let's talk about setting exits. Remember, rule number 1 of risk management says that we define our exits before we enter the position. A lot of people don't know what their exits are. This is going to be a little bit different for you. So I heard this question over and over again in 2018. Hey man, I want to hodl, but how do I know when to get out? Well, it's a little bit different, right? So hodl, it depends on what your strategy is. If hodl means that you're going to be fundamentally in this coin for the next 5 years, then you don't have an exit strategy. You're stuck. But what I found is that a lot of people that were, said that they were hodlers don't want to deal with the hairy back of a parabolic rally. They'd actually like to get out of it, and maybe they can consider re-entering at some point in the future. This is what I found a lot of people really, really want. So what they really want is trend trading. So again, you must define your exits before entering the position, not after. Here's a twist, though. Trend traders do not have profit targets. Believe it or not, trend trading is not defining a profit target. So for you to define a profit target implies that you know where the trend ends. And so you're getting into the same old game of trying to predict the future again. Stop doing it, because what you're doing is you're artificially attenuating the potential of that trend. What happens if it goes up 600%? Wouldn't you like to be on board that? Yes, of course you would. So we trail stops to allow ourselves to be taken out of a trade. So that's the only way we leave a trade, is when we get taken out of it. So in other words, we trail stops so that we can let it breathe, because charts don't go up forever in one direction. They do breathe, they do pull back, and we have to give it enough room for this to breathe. So in this case, what I might be doing is I might be using the bottom half of this envelope. So using an end day breakdown level. So these are usually quicker than the entry level. So an end day breakdown level, like a 10-day breakdown or a 13-day breakdown, something like that. The challenge here is to give the position enough room to breathe and to stay in the primary trend. Tough to do. Quite honestly, one of the most difficult things about trend trading, the most difficult thing is to get onto that major trend. The second most difficult thing to do is to watch. And again, we're getting back into the mental side of things. But if you have this screaming rally, what can be really, really difficult to do is to keep your finger off the mouse and not take yourself out of it. It's coming down, it's coming down, it's coming down, but you've got to give it time. You've got to give it space to let it breathe and go back up again. How many times have we seen that? Happens all the time. So we don't want to give too much back if the trend is failing. Now we're going to get into step 7. Step 7, scaling in. So scaling in. Most swing strategies start with a full-size position and scale out as the trend becomes profitable. Right? So we start off maybe with something like 3 contracts at this. We go long, and then we take one off here. And then we go another distance, and we take another one off here, and then we try to run the last one as far as possible with a minimum position size. So at some point, we get into what we call a free trade. We call this risk out, and then it becomes profitable. So this is typically used in something like day trading or maybe swing trading, is that you're going to scale out based on a full-size position. Trend trading is different though. You scale in as the trend proves your initial entry correct. This is, again, counterintuitive. Most people don't want to do something like this, right? But you're actually scaling in as the trend proves you to be correct. So it's important that the scaling ladder be predefined as well too. So each one of these, so as you enter a position, so each position is going to have its own stop loss to it, right? So if we maybe add, here's a second position that comes in, this position itself is going to have its own stop loss. So each additional leg of the ladder is going to have its own 2% stop loss to it. Now I'll get into step 8, and I think we're right on time here. We're doing good. We're going to finish right on time. So thanks for sticking with me tonight. Step 8 is what I call filtering. Filtering is the ability to delay entries until the trend condition favors further trending. This is a great application for a longer-term moving average to keep us away from bottom fishing. So an example of this might be, here's the 200-day moving average. It's heading down. Why are we trying to pick the bottom here when we have the 200-day moving average heading down? Let's wait until the 200-day moving average starts heading up, or at least the price is above the 200-day moving average. For example, and I'm just throwing out one example of this. There's many, many different ways to do this, or different moving averages to do this with. But as long as the price is below the 200, generally that implies that we're in a primary downtrend. Why are we trying to pick the bottom? Let's buy stuff that's heading higher. You don't have to get the exact bottom tick. There is no medal that's given out for you getting the exact bottom tick of the sell-off. Just wait until something starts to trend higher. There'll be plenty of room when this turns into a primary uptrend. So we can also filter out undesirable candidates that don't meet liquidity minimums. Step 9 is a little bit different. Again, we're going to go back into some of the mental or professional side of things. Ownership. When was the last time you heard that about a strategy? But here's a statement of fact. You will not make money using someone else's trading system. And you're not going to get anybody else to tell you that either. You won't make money using somebody else's trading system. Why would I say something like that? Your mind knows, your subconscious mind knows, and it interprets it as risk if you're using somebody else's trading system. The subconscious mind views somebody else's strategy as a threat. And it will pull you out of that trade at the very first negative tick that you see. So you need to make this strategy yours. And there is only one way that I know of to do that, to make it yours so that your mind will accept your entries as not a risk. This is where I get into what I call the strategy development cycle. What we're going to do is we're going to start off by identifying what our goals are. And bear with me for a minute if you've already heard this before, but you're going to start out by identifying what your goals are. What do you hope to achieve through your trading? You're going to express those in the market through rules. At some point, you're going to get some kind of results. What you need to do is you need to analyze those results, understand if there's a root cause for any lack of performance. You need to make corrections. There is a reason why there's a steering wheel on a car, after all. We don't just go in a straight line. We make corrections constantly. And then maybe even revisit our goals again before we trade again. Are they realistic? Okay, maybe our rules have changed. And ideally, what you're going to do is you're going to make this thing spiral upwards constantly, because repetition is what's going to make this thing better and better and better at this. And this is how you teach your subconscious mind to accept the risk of trading this strategy, because all of a sudden it's no longer Doc's or Mav's strategy or some other dude. It's yours. It's your strategy. So even if you've been fed elements by somebody else, the way that you arrange it makes it yours. But it's the way that you keep driving it for continuous improvement that makes it yours. So this is why every course that I teach shows you how to make it yours like this. I think it's extremely important. Because again, I'll go back to the first statement that you can't trade somebody else's strategy and make money with it. Your mind will not allow you to do that unless it's play money. And then we get into the final step here, step 10, level up. Level up. What do I mean by that? There is no such thing as the holy grail of trading. There are strategies, there's markets, there's traders. You have to find the combination for you. So start with the basic elements of trend trading. I've gone over those tonight. They're relatively simple, aren't they? Study how it has worked in the past. Find markets that are apt to trend. There's going to be some crypto assets that trend better than others. Believe it or not, even in the midst of a bear market that we're in right now, there's some crypto assets that are trending right now today. Continue to work it and experiment with this. Your goal should not be to find the perfect strategy, but rather find the one that you can turn into your strategy. I want you to own it. I want you to put your own stamp on it. So I think it's an excellent idea to start with one that professionals use, which is trend trading, right? So again, I hope tonight that you've gotten a sense for why, even with this really super, super simple strategy, sometimes it can really wear on you because you've got that issue that it's difficult to figure out where a trend really starts. And you may make a lot of entries trying to get into that trend. You get stopped out, stopped out, stopped out. These are small losses. But you've got to be in it to win it. You've got to be on that trend when it finally does leave the station. And then giving back some of it on a pullback is wearing on your psyche, because all of a sudden you go from being winning and super proud of your trade to all of a sudden, oh no, I was up way big and all of a sudden I'm up just barely. But that's what you have to do to improve in this. Okay, so let's do a quick recap here. We looked at how HODL sounds great on paper, but lacks structure. Buying the dip just averages down losers. Don't do it unless you have structure behind it. Trend trading is how professionals ride big trends. Most retail traders don't practice trend trading techniques, or they're still on the hunt for the holy grail, that strategy that wins every time and doesn't risk any capital. We saw that one of the challenges was that the entry to the actual trend can be elusive. It's hard to find. You have to be persistent and not give up. And that most retail traders give up before it comes. Oh no, don't do it. If we're going to trend trade, we need structure. We showed entries, we showed stops, exits, and scaling techniques. We also discussed some filtering techniques for trends and coins. So lastly, we shared that we needed to own the strategy by continually refining it. That's the only way that we're going to make it ours. So these 10 steps, while they might seem simple, are aligned with how I trade every strategy, regardless of technique or market. So I'm sharing with them with you today with the hope that they can make a difference for you if you apply them properly. Take my words and admonishments and my bloviations, according to some, to heart, because that's what makes all the difference. It's not the nuts and bolts, guys. It's what happens upstairs. It's how you combine them up in your head that makes the difference between a winning trader and not one. For those of you that want to move beyond HODL to the next level, I do have more to offer for those ready for it. The ReadySetCrypto Trend Trading Class. Here we go. The instructor is yours truly. Over 3 hours of video content in the members area. It is a $99 class on sale for $79 tonight, or if you're a premium member, $69 if you use that coupon. The discount disappears this weekend. The class will cost $99 starting Monday. Don't delay. So here's what we're going to cover in the class. Number 1, what is trend trading and the applications for it? Number 2, overcoming the mental challenges to trend trading. A lot more content than I gave you tonight. Number 3, what are the elements of the strategy that we'll need to define? Number 4, entries. We go heavy into entries. We go into stops. We go into exits, position sizing, scaling. How do you do that and do it in a controlled manner? How do you filter through your candidates? How do you apply trend filtering? How do you own that strategy? How do you actually do that strategy development thing and actually own it? How do you convince your mind that your next trade entry is not a risk? And then finally, how do you do journaling? How do you do performance enhancement and programs? So how do you put it all together? How do you actually drive a strategy and run it like a business? Here's what the class looks like. We've already got it started. All right, so you can get access tonight if you would like to. Here is the link to get signed up, ReadySetCrypto.com/trend. If you go out to our store, you will not find this. And I know I'm going to get an email tonight saying I couldn't find it. I went to your store and I couldn't find it. That's because it's a private sale. We're not going to put it up on the store until next week. And then when it goes up next week, it's going to be for $99. Going to sell it for $79 tonight or $69 if you have the coupon. It is not available to the public, only through this link. Save $20 tonight. Get access to it immediately. Okay? Or should you choose to do so, we're actually having a happy birthday sale. So Mav and I started things off almost exactly a year ago, Thanksgiving, a year ago, and we've had a ball, and it's been great to work with you guys. So we're having a 15% off this week to celebrate. If you go into the premium classes, you can get 15% off the premium classes, or you can go get yourself some swag if you'd like to. Actually, the shirts are really nice. So there we go. All classes 15% off this week to celebrate. If you can't commit, if you can't pull the trigger on this, if you're just not sure if trend trading is for you, try our newsletter for free. 1 week for free, normally $49 a month. Comes up 5 times a week. Get in while we're grandfathering extra services. At some point, we are going to be pulling off different services and creating a different service from them. So if you come in through this, you get grandfathered. ReadySetCrypto.com/trial will get you in there. And they're going to ask you for a password. Write it down. It's pretty difficult. It's called ReadySetCrypto is the password to get in there. Okay. So again, here's the 3 links. ReadySetCrypto.com/trend will get you in the trend trading class tonight. ReadySetCrypto.com/trial will get you a week of newsletter trial, or any other classes. Just go out to the store, 15% off through the end of this week. Thank you for your patience, everybody. I hope you got something out of tonight's session. I would be delighted to take your questions at this time.